Hello, welcome to a new video of Crypto Michael. As you know, I'm providing daily TA videos on YouTube. I'm also providing content on social media, Twitter. If you like my channel, please subscribe to the channel. Please like beneath, that would really help me in growing my channel, or reply. Today, I didn't really want to do any video as I'm studying for my resit, which is coming up on Wednesday. It's going to be the final one of my study, finally. So I'm a little bit stressed out by doing that. Regardless, I came up with a subject, so I started to do some stuff on PowerPoint just to share my view, as I truly believe that we are in the bull market of crypto at the moment. And we're going through some slides in TA. It's actually very simple. The question for the new renewed system is increasing by the day as people are getting fed up by the inflationary system that we're currently having, through which the rich become rich and the poor remain poor. And one of the countries that we are seeing it already is the country that we have as the world reserve currency, which is the United States. And I'm not really sure that that's the world reserve currency anymore, as it's currently actually the central point of trouble for the world. So if the USA is in problems, we are all in problem. But I'm not going to discuss that. I'm just going to discuss the system and that why we should be adapting towards crypto or commodities. If you are poor, and I've experienced it myself around me, it's extremely difficult to get out of the system we have. As if you have money, you can lend more money, and you can use that money to get a return on the money that you spend. So for instance, if you have $1 million and you lend more, you lend another $1 million, you get housing, you rent it out, you get more money, you get more adoptions towards getting more from loans. Well, if you are poor, it's really difficult to get that rent or to pay that rent, as your income is not really going up. So the system is getting more tight for the middle class that we have, and currently more and more people start to realize that it's not working out really well, combined with the fact that we've got an inflationary system rather than a deflationary system. Essentially, your money is losing value over time. So if you have money in the bank, which you don't need to use for day-to-day life, it's losing value if you have it stuck in the in your savings account, which means that you have to have it somewhere that increases in value. Otherwise, you're losing wealth over time, and that's strange, as money should be money just one-to-one rather than losing value over the 100 years. So for instance, the money you have right now has decreased significantly in value in 10 years from now, as you can buy less. Reality, I'm living in Amsterdam, and the housing markets here have increased in prices with like 500 or 600% in the last 20 to 25 years. Well, if you check the average model income, that has only increased by 50% in the same time, which means that the whole pricing bubble on housing is debt, and filled by new debt by investors that can continue lending while the poor have to pay, or that relative poor people have to pay the rent they at some point can't start affording anymore. And currently we're getting in a phase with Corona that it's quite hard for people to continue paying their rent, to keep their job. So we might be getting on that threshold point. It's probably going to end sooner than we are expecting. You probably have seen on my YouTube that I've got several scenarios for the stock markets. One of them is that we are currently in a dead cat bounce or rising wedge bounce or trap, after which we continue falling down. The second scenario I have is that we don't get what we want, in which we see the drop down later on, given that coronavirus second wave is occurring. And that will just continue rallying upwards, in which the inflation starts to increase as well, through which you're not better off by holding equities at all, but we could still have a blow-off phase as the 1930s. Either way, it's due to be ending quite soon, or at least the system should be ending quite soon, given that we're just hitting all-time highs of debt levels while the economy is having some serious trouble. Imagine if we get a second wave, more and more people will be losing their jobs, and the small businesses are the backbone of the economy, and they will be hit the hardest, and essentially the Fed can't do much for these people, as people just don't trust the other people anymore and won't go out and won't spend their money. And when people lose their trust and start doing stuff that are the opposite of what the Fed or the ECB wants to do, the system is about to end. The Fed and the ECB can do a lot, but some variables that I can't do anything about, and one of them is trust. So based on that, the obvious people will start to blame that the coronavirus was the trigger in 20 years from now. However, it's not the case. The system itself is the trigger and was faulty from the beginning, as it's just an expansion of fake wealth started since 1970, maybe even earlier, since the 1930s when the United States took over, actually since Second World War. The system is faulty, and looks like we're going to end it in the next few years. And I'm not going to change that system. The only thing I can do is play it the right way, so I will end up at the right side of the world. And I can also try to educate you and share my view on social media, in which I can help others around, rather than staying stuck in the old-fashioned way, as many people are still in. Main example, my parents. I love them with my dear heart, but like, it's really difficult to explain them how the world might be changing, as they have been experiencing a certain system for the past 40 years. So it will take years before they are actually going to understand that the system is changing, and then they might be too late. So that's why I'm helping them out. Through that, it's also similar that in case of a collapse of the system, as what I just discussed, is that we might have an accelerated inflation, which seems quite difficult for the world reserve currency to occur, through which an increased inflation would be bad for the markets, and then you can see the blow-off top. But usually it ends up with a deflationary crash, through which debt can't be repaid, and the whole system just collapses. But then it's just a bigger version of 2008 through what we've witnessed by then. Both ways, people will lose their trust in the fiat currencies, and then they will seek to search for other assets. And as crypto is relatively new, crypto will be the symbol for the young people. And the older, old-fashioned people will start to realize that the system is ending, and they will start to lose their trust in fiat currencies, and they will fall back towards commodities. And if you look at TA and some data, you can see that gold and silver are relatively undervalued. Uranium is actually a good one as well. So these assets will also do great in the coming years, given through valuation, given through the fundamentals, as the older people won't jump over from our current system towards cryptocurrency in one go, as it's just too new. So they jump over to an asset that they are familiar with, based from history, and that's the reason why gold and silver can actually be doing well. However, are we going to adapt from silver or from the fiat currency towards silver and gold? I just don't believe that we will. Essentially, given that we are coming from that age where we were paying with silver coins towards fiat currencies, towards internet and more globalization through digitalization, which means that it's more likely and more reasonable that we're going to adapt to a new digital system, which is deflationary, which is decentralized, as we are fed up with the governments in this way, and that is through crypto or DeFi or digital assets. So a certain group is already making that jump, and after I've finished my reset, I'm going to deploy more towards the jump as well, as I'm full focused on it. But But more and more people are going to make that jump. And at some point when more people are going to make that jump, the train is starting to go away and can't be stopped anymore. As more and more people realize that the current system is faulty and they want to escape and jump towards a different one in which they can decide for themselves what they can do with their money and don't lose value. So there's a certain threshold at some point where the jump is going to accelerate, and then it will also accelerate the collapse of the current system we have, as people will be jumping over. So the current system is wrong, and yes, this video is basically just my own view and just a monologue, just saying what I want to say, but it's about content that I want to provide more in Dutch and English on this YouTube channel. Essentially, it's coming from the way we are taught, and I do believe that we are taught stuff the wrong way, as we have been teaching this stuff for like 60 or 70 years already. For example, I'm studying economics at the University of Amsterdam here, and what I've experienced is that every model that I'm being taught is already 50 years old and doesn't really make any difference in the current markets anymore. In these books, there's not being said what the solution is for any coronavirus, neither for an everlasting printer as the Fed. These are models built on a perfect market with only calculatable risks which we can expect to occur. If something like a black swan or an outlier like coronavirus occurs, or an outlier the other way, which is the Fed, the model doesn't have any solution for it. So essentially we should be getting rid of thinking everything inside the box. We should be thinking outside of the box, as we are experiencing something that's outside of the 95% normal graph and outside of this standard box we live in. What we do have to do is read history, as this is occurring every time. It has occurred a few times in the previous few hundred years already, which is, for instance, Spanish era, or for instance the Dutch, or for instance Germany in 1930. However, Germany was different as it was not a world reserve currency, but you can compare the fact of the collapse of Germany with, for instance, Argentina or other countries that are collapsing against the world reserve currency, as it's normal that people are flying towards the world reserve currency as they do not trust their own currency anymore. And what you see in Argentina could also happen to the whole global economy in the United States. At some point, the central bank of Argentina can do whatever they want, but they can't solve it anymore. And then you are seeing a faulty and collapse of a system, as we are witnessing right now. So you can't compare Argentina to, for instance, Germany. So it's time to adapt, as what I've been saying. And there's a group of people that won't be adapting. There's also a group of people that are saying that Bitcoin goes to 1K. That's fine. At some point they will. At some point they can't. And their bias will flip as well. They can't sustain the bias they have. And especially when we're getting to a threshold that we are right now, that the world is fucked up, and we're getting to a sort of crossroad in which we have to decide which way we want to go. There's always multiple parties, and you have to realize that you have to analyze for yourself. But it's interesting that I see more old-fashioned people from actually an older generation than me flipping over their bias towards Bitcoin and understanding that there is a certain desire and certain demand for digitalization and cryptocurrencies, which is basically through what's been happening in the recent months on the markets, which is the economy failing, the Fed doing what it's doing, the coronavirus kicking in, which opened many people their eyes as well. So I can't be more than bullish than ever on the long-term perspective on the markets than I have been. Fundamentally, there's just so many ground for crypto and Bitcoin to adapt and to be huge in the coming years, similar to gold, silver, and uranium. rather than the equity markets or the current system we have. So what can we add to that in the technical perspective? Well, what we witnessed in March is a huge liquidity crash. I mean, every asset crashed heavily down because of short-term panic as the first huge panic on the coronavirus started to kick in. Which seems very unlikely to happen again, as if you're counting on that, you're counting on a sample size of 1 in the past 100 years. If we are going to crash with the equity markets, we might see short-term volatility, but as I've stated earlier in this video, the crash can also occur after a blow-off top, and then it will take 1 or 2 years more before it occurs, and then it's just normal that Bitcoin can crash 40% as well, and Bitcoin can make it drop from like 30 grand to 18 grand, who knows. Counting on something that has occurred once is the usual habit of people, in which they assume that what happened is going to be normal from here, rather than assuming that it's just an outlier. So the similar case is that people are constantly expecting every bounce to be a bearish bounce until they are too late and are too late to buy back in. And I am assuming that the current markets is coming into a level where we are also on a flipping point. If we get a new higher high on many charts, the bullishness will be confirmed. But right now people are stating that it's still lower highs, while the construction is just way different than it used to be. Alright, since the March crash, the markets have been grinding upwards and flipping levels heavily. Finally adopting above the 100-day and 200-day MA for the first time since last year, but for the first time significantly since 2016. And we lost that momentum in the bear market. We made already above it in 2019 already, and now we are above it for the second time. Since the halving, the altcoins have been doing really well, and DeFi has started to kick in. Through which altcoins are also finally releasing their new updates. Cardano has been doing that, Silica has been doing that, and the whole momentum and sentiment starts to shift in the markets, which is essential as well. So let's take a look at the charts, and I'm not going to deploy many charts right now, I'm just going to point out some interesting figures I have. What are significant signals? Well, we are above the 100-day and 200-day MA. We are still in an uptrend since March. Even if we crash to the mid 7Ks, which could occur, we are still in an uptrend on a weekly, and we are providing a substantial buy the dip opportunity. If you want to get the dip, that's the one you want to get. Altcoin market cap finally showing strength while still on accumulation. As we know, if something is in accumulation for a very long time, the breakout out of that range will be a huge impulsive wave as strength. Remember Silica. Volume increased on all the markets preceding price. Increased interest from institutionals. Well, the interest from institutionals for the stock markets are decreasing. And essentially a breakout of the range will start a new impulse. So if we look at the total market cap, we can see that we are acting above the 100-day and 200-day MA. And we are doing that since 2015. And essentially, yes, we have seen a rally above the 100-day and 200-day MA, showing the significance, which is a smaller example of this bull market here again. We've dropped below the 100-day and 200-day MA after that as well, as we have seen already due to already earlier in February. And I assume we were ready to continue that rally. Unless there was the outlier of Corona. And as we see, we have done the exact same thing here previously in 2015, through which we are doing it on a larger scale right now. I'm assuming that the current bull market will take longer than the previous one, but will be significantly bigger, through which assuming that a market cap between 8 to 12 trillion is not all to expect. So in this case, you can see that we are above the 100-day and 200-day MA. So even if we make a drop of 15%, we're still in bull territory. Volume is increasing, and the whole build-up is way different than we experienced earlier on, in which we do see lower highs still, but we do see a accumulation period on a higher level, which is similar to areas like here. So as long as we stay above either of these two levels, there's still confirmation that we are trending upwards. And when we do, we can see that we've still got an accumulation range. This whole area is just accumulation range. Once we break this high of 300 billion, it's likely to expect that we are going to take this high and essentially start to rally towards the next level with the total market cap, in which levels of 500 billion are not hard to expect. As we have been testing this resistance zone for many times already, the next test of this resistance zone is a breaker. What we also see is that the total market cap is even more accumulating here. This is just a healthy accumulation before continuation. Similarly, we also see that we have been acting above and below in the previous bull market. Over here you see a similar accumulation period as we are witnessing right here. Right now there's an increased volume. In this period, the decrease is because there is a big volatile move coming up. Due to this build-up, I'm not assuming we're going to see such a huge drop down and increased volume. I'm assuming we're going to see the breakout here and the volume will come when we break that. If we do drop down, we know that this level here, just around the 100 and 200 EMA, are crucial. So accumulation here on a higher level, in which we've also been seeing that there is a range over here, and now we are acting inside a similar range. After that, the breakout caused a substantial rally. As we can see, we've got a range, we've got a range, we've got a range, tapping these resistances over and over again. The next step of this resistance will likely take the markets towards 150 billion or 200 billion first. So is this the right time to be bearish on the markets? Maybe short term, if we lose 8688, okay, you can. But maybe not. We've seen that we've had many bearish retests and full retracements, of course. But at some point, when the resistance gets tested so many times, and you are now currently making higher lows while volume increased and while the fundamentals are kicking in, there's going to be the point that the bias flip has to occur. In which, by the dip approach, is the approach you want to have. And in this case, we're getting close to that threshold. And either way, if we get towards 7k with Bitcoin, I think we are going to see a substantial upwards run in the coming period. That's the conclusion of my video. I think being bullish on crypto is not a bad case. I hope you have enjoyed this video. If you did, please subscribe. If you liked the video, please like beneath. Follow me on Twitter, and I'll see you back tomorrow with Altcoin Sunday.